Hello, everybody. Welcome to Talk About House. I'm Todd.
I'm Oana.
Okay, today we are going to talk about the scenario where interest rates drop substantially and it causes people actually puts them in a position to sell. Now, we actually have data from a poll that was taken. We didn't take it. Bankrate took it. And we grabbed it. We grabbed all the data, made a chart.
Okay.
And so what we're going to talk about is there's this theory. Of course, we've had a bunch of crash bros drop in the channel the last few videos because, again, we've took the NAR data and the consensus is that, because of shortages, home prices likely to keep going up, especially if interest rates drop. But the crash bros now, just like they said that interest rates would cause the housing market to crash, they're saying the falling interest rates declining, will now cause the housing market to crash.
So I am impressed that the Crash Bros are subscribing to the channel, so we must have some value besides the people who are interested in having good information. The Crash Bros are interested in us too, so we should be very proud of ourselves.
We should be very proud. Okay, so let's do this. Let's put the chart up.
Okay.
And let's talk about it. Okay, so this is the chart. Now, what this chart represents was people were asked, at which of these thresholds would you sell? Okay. Now, this doesn't mean the second this rate hit, everyone would sell, because this would mean everyone would sell. Okay. Effectively, everyone would sell, or a ton of people would sell. But basically, what they were trying to get out of people was, you're locked into this mortgage. Would you sell it and get a 7% mortgage, which a lot of people, literally nobody will do. Nobody is selling getting rid of their super low rate. Okay. Anyway, we'll go through the chart. Okay. So what happened was I had to make this chart because the data they gave was different data. They let people guess more than one or pick more than one of these scenarios. So I had to strip out all the people who had multiple guessed. Okay. So we'll start at the bottom on this. Okay. Now, 42% of people said they will never sell regardless of what interest rates do. And this is strictly based on they have a low rate. Now, the only people they talked to were people that had mortgages. So the premise was you have a mortgage on some property. It could be your primary resident rental, whatever. And would you sell it if interest rates dropped? Okay. And then I talked to a couple investors, a couple other people. Said, hey, what are your rates? And asked them about if they would sell or whatever. So here's the thing. First of all, 42% want it. They would never sell. Talk about that a little bit. We know cash buyers only sell when they need the cash for something else, right? But 42% of people who have loans, talk about the psychology of that. Let's say you got a 3% investment loan on a property and the property is paying you 10%, rent plus appreciation. That's really good arbitrage on your money, right?
It is. Look, I mean, if you're making better return on your money than inflation, woohoo, good for you. That means it's free money. So that makes a lot of sense.
Okay. So the first little bucket there was 5 to 6%, said about 8% of people would consider selling the rate. Now, we don't know what rates these people have. They may have a 4.5. So they may say, look, if I get 5.5, that's only a 1% difference. I will eat that to sell this house and then go buy another house, right?
Right. So for those of you that just heard him say 8, if you're buying a house right now, it feels like only 8 people are trying to sell, right? Because there's not a whole lot of inventory.
Yeah. And so then the next one here is about 14%. You can see this makes sense. It's more and more people. So about 14% said, hey, look, between 4 and 5%, maybe I would give up the house and buy.
Right.
Oh.
So we don't know what current interest rate they have, but that's their pain point of regardless of what their current interest rate may be, should they be able to get this particular interest rate, they would consider selling so they can buy something else.
Okay. 17%, 3 to 4, 19% under 3. This adds up to 100 here. Now, So here's the magical thing, Oana. This is kind of funny. With Crash Bros saying, but Todd, when the interest rates drop, all the people will dump their houses on the market and it'll crash the housing market because so interest rates going up was going to crash the housing market. Now interest rate going down. This literally the same opposite of the thing is going to, that they said would crash the housing market, crash the housing market. But here's the funny thing. The whole premise of this is they would sell one house and buy another house. So effectively, yes, they're potentially adding a listing. They're also adding another buyer that's going to suck up somebody else's houses. So if you have 1 million people that sell their houses, you have 1 million new buyers, and they basically are just swapping houses with each other. They're just trading one house for another. I'm upgrading, I'm downgrading, I'm moving to San Diego, I'm moving to Las Vegas. They're just swapping houses, right?
They are. However, they are also competing, right? Because we have all the people that were already looking for homes that either don't need to sell or don't have a house to sell, and they're looking for a home. So these people who are going to be selling their home, buying another home, are competing with those people that have been looking for a home all the way along.
Here's the other thing I think is funny about this. You know, so if you look at rates below 4%, so 3 to 4, under 3, 42%, that's like 2/3 or that's like almost 80%. That's 78% of all people are saying until they get rates get under 4. One, if interest rates were 4.5%, how many people right now would come out of the woodwork, especially millennials and Gen Zs, to go buy?
It wouldn't be just them, it'd be everybody, because everybody has definitely been negatively traumatized by the 7% and change interest rates that we've seen off and on over the last year. So I think when people see those interest rates drop, they're going to jump in the market and say, hey, I missed the boat the last time. I'm definitely not missing it this time. Or I was able to get something good last time. I'm going to roll the dice again. I'm going to try to get something good again this time too. People are going to be very hesitant to not grab on to a piece of real estate that meets their criteria, whether it's for an investment or for a second home or a primary residence. They understand that inventory has been scarce and that they're going to have to compete because inventory will continue to be scarce, even though inventory numbers may rise, because the number of buyers will rise at a greater level than the number of homes available to purchase.
Right. I think a lot of Crash Bros heads just exploded because you literally said the exact same thing they're saying, but then they're saying that would cause the housing market to crash, which of course we've been hearing since 2013. Remember the shadow inventory of 1 million foreclosure homes? We're going to do another video. We've got all the foreclosure data, and it's literally like, it's pretty funny when we go over. There are literally no foreclosures coming. There are none. Okay. So here's what sort of started all this. I called some of the investors that we work with because the question I'm getting now is, does it make sense to pay off? Like if you're an investor, you did one of two things. You either paid cash or you put like 30, 50% down and you got a loan for the rest. Okay. Now what they're saying is, should we pay off the loan? I get that question. Should we pay off the loan? And I always ask them, what's your interest rate? And they 3.5. That's usually like where most investors are. And remember, investors who bought like in 1819 had a chance to refi in 2021, and a lot of them took the chance. So they went from maybe their 4.5% investment loan to 3.5%. And I say, well, what would you do with the money if you did? Like you're saving 3.5%, but could you get more than 3.5% somewhere else? And 3.5% right now alone is inflation's 3.5%. So could you get a higher return? And they always say, yeah, I could get, 5% in the money market or some easy thing. I haven't paid anything off. People that we're finding that are selling are using it to pay off some thing like a high interest debt, a credit card, a car, or something like that maybe has a higher interest rate. Another thing that I found out was I talked to a friend who's in a high price range area who's got a house, and I just said, hey man, because it's like $1 million, it's like a $3 million house. I said, what kind of interest rate do you pay? And he said 2.25%. But we actually, if we could find a bigger house, like a house we would want to move into a bigger house, we'd have to get financing on it. We can't do it right now because interest rates are too high. But if they dropped and it made sense, I would buy the bigger house. I said, okay, but would you sell the other house? Absolutely not. Would never sell the other house. That 2.25% interest rate will be there either until they die or until they extinguish it at the end of the loan. That they literally would not get rid of that 2.25% interest rate, and which is another thing that's locked up resale. Now, you would think new home builders would explode the amount of new home building. We actually have the same amount of new home building that we had 30 years ago in total numbers. Oana, what's different now between the U.S. 30 years ago?
About 70 million more people.
Okay, now, this is really important for everybody out there. When you hear the Crash Bros say, but we're building more houses than we built 30 years ago, we have 70 more million people in the U.S. We should honestly be building 30% more homes than the long-term average, and we're building less. Over the last 15 years, we've underbuilt by about 40% less than the long-term number of houses that need to be built. Mm-hmm. Probably 7 million homes of a shortage.
Right.
So all of a sudden is if you have a restriction in the normal number of houses that come on the market. Because remember, the prices of homes are not based on all the houses. They're only based on the houses that are actually happening to transact. Mm-hmm. And when you squeeze off that amount of homes transacting, you cause a shortage. And what happens to price in a shortage?
Supply and demand. Price goes up when you have more demand than you have inventory.
Okay. The problem is, Oana, I feel like we're in this situation where there's almost nothing. Because remember, 2 years ago, what did they say would happen to, in 2022 when interest rates went up?
Housing would crash. I'm sorry, but it's just getting boring. I mean,
yeah.
If the sun comes up, housing will crash. If the sun goes down, housing will crash. I'm sorry, you need to make up your mind because you can't have the same event you can't have opposite events have the same outcome. That really doesn't make sense.
Yeah, what's funny is I remember, you probably think Oana has a little attitude. We did this in 2013. We made a video, and you can go back and look at the video. But we talked about the shadow inventory, and I said, Oana, what do you think about the shadow inventory and these millions of houses that are supposed to come back on the market? And I think your comment was something like, well, then show me the houses. Like, where are the houses? Like, I want to see the houses.
Right.
Like, if they're there, then they're there. But if they're not there, we're just going to keep, moving on and doing our thing. And of course, it never happened. What turned out had happened was some person had counted like every single filing for foreclosures. Mm-hmm. So if a house got like 2 notice of defaults and then a notice of trustee sale, they counted all these up. And then they subtracted out the actual number of foreclosures. And they said, holy cow, there have been all these other filings. We haven't seen those yet. Mm-hmm. But what they didn't take into account is some houses, like in Nevada, it takes years to foreclose, and you sometimes have to refile the notice of default every 9 months.
Right.
Or every 3 months.
Well, and if somebody makes a payment, that resets the whole thing. It's much more complicated. It is much more difficult to foreclose. Not only that, but people have equity, so foreclosure is not really a viable option for most people because all they have to do is put the house on the market. It'll sell. They'll put money in their pockets. The lender will be made whole, and we're good. This is not a short sale environment. That's not to say that everybody's got equity. Certainly, people who maybe bought yesterday maybe don't have equity because they didn't put enough money down and that sort of thing. But most, by and large, most homes do have equity. Most homeowners have equity. So the idea that we're going to have this wave of foreclosures, that we're going to have all these distressed sales, that's not reasonable, and that doesn't reflect the data on the ground.
The reason why we did this video, this chart that you got the data, I thought was pretty interesting. It would be interesting, what I'd like to see is them to pull buyers and say at what point, like maybe renters or people thinking of buying, and saying at what point would you be interested in buying a house if you don't, like at what interest rate, and then see the comparison between demand and number of sellers. Because remember, these people, if they do sell, are also going to be looking for something to buy. Mm-hmm. And then the other thing we talked about, of course, is, if you want to buy, like we've been trying to buy a second vacation home, mm-hmm. but you got to have the house you want. Mm-hmm. You don't just go buy anything. So if there's a limited inventory, that's automatically choking off buyers. Mm-hmm. We had less sales in the last 12 months than we had in 1995. Mm-hmm. And people are like, oh, that's a housing crash. No, it's the opposite of a housing crash, actually. That we don't have less sales, but less sales because there's no inventory.
Right.
Yeah.
So what we're talking about is less number of transactions, has nothing to do with price.
Right, it has nothing to do with the price. Actually, home prices are up almost 5% over the last year. They've basically been, we said they would moderate 2 years ago. And what's interesting is in Vegas, every spring to fall home prices drop about 3%, and then they go up like 8% in the spring, and then they sort of do this natural cycle. And that natural cycle has just been exacerbated a little bit, but here we are, July, almost August of 2024, and July, of course, is going to be June, which June was the highest all time for median home price in the U.S. Same in Vegas. Vegas, we hit an all-time high. We'll do a market update for Vegas here in a few days. The last numbers we had last time we did a market update was that Vegas had reached another all-time high, beating even 2022. But yet people were saying 2 years ago that today we would have 40 or 50% less home prices because interest rates would go up, and there was this inverse relationship between price and interest rates. Apparently there's not one. I mean, maybe you should tell the housing market that. Maybe you should show the housing market the chart with the inverse relationship, because the housing market hasn't figured it out. It's just doing what it does.
Right.
Right.
So hopefully this was interesting to you guys. If you are interested in buying or selling in Las Vegas or anywhere else, please feel free to reach out to us. Our information is below. Please remember to like the video, subscribe, hit the notification bell, share the video, and leave us your real estate related comments. We know that there's been a lot in the news politically. If you are interested in finding out how do politics influence home prices and mortgage rates, leave us a comment below and encourage us to do a video on that, and we will be more than happy to go ahead and do that for you.
Maybe. I don't like doing political videos.
It's not about being political. It's about looking at how elections influence the real estate market and mortgage rates.
Yeah, maybe.
All right, so leave us a comment and tell us, should we do it or not? Because clearly there is not a consensus over here about whether or not we should do this video. So we appreciate you watching. Thank you for subscribing, liking the video, hitting the notification bell, and leaving us your real estate related comments. We'll see you on the next video. Bye.
Bye. Bunny trail. Did you see the text that Michael sent?
Yeah, but I didn't understand it.
He watched the video where we drank the